Hey there, everyone. Happy Friday. Time to de-stress, if you will. I got to tell you what, over at the Discord, the profits popping off on the trades that we had, shorting the market, me 60% up off of yesterday's purchase TMF, cashing in today. Got to tell you, that part of it, absolutely pretty sweet. I took some advantage to dollar cost average. I'm going to tell you about some of the reasons why I did that, why today made such a good day. I'm going to show you technical reasons in the chart. If you guys want to join me and the other panel experts over the Discord, make sure you use code word cash when you sign up. No, it could be hard thinking about spending that cash right now, but you have a whole team of people there to help support you with financial freedom and a community of thousands of members surrounding you as well, sharing their ideas, their thoughts, their support. And who doesn't need support at a time like this? Guys, let's get into the charts and I'll show you more of what I have to see for SPY, QQQ. And I'll tell you what, Russell 2000, the IWM, well, we'll look directly at the index itself for this one because I have a clean, very simple, easy to understand chart. And I think you're really going to like what you see. Let's take a look at it. So we'll kick things off with SPY. Guys, what sort of shape are we in right now when we look at the S&P? This is the monthly chart. And I know I talked about it, but I want to remind you of a few things. One, we're down below the 20-month, and that's actually pretty significant to actually drop down below this blue moving average here. The pink one, the 50-month moving average that you have on here, we touched it as a low in October 2022. Before we took that rocket ship, that was the last time that we touched it. The time before that was March of 2020 when the pandemic, the whole lockdowns happened, Fed's cut rate to 0, and also tons of stimulus coming our way, and we caught a rocket ship. Before that, flash crash. That was 2015, 2018 with the Fed tightening and talking about possible trade difficulties down to the 50. Again, we haven't quite gotten there yet. There could be some more pain, but if we do get down to the 50, let me put a horizontal line on there so you can see the coincidence that we have. As a matter of fact, let me just can this for the moment. Actually, let me hide it because I don't want to get rid of all that work that I did. So let me just hide that for the moment just so we can keep this nice and plain for you. Hide. And let me see, what else do we got? We have this running right here. We'll hide that as well. Perfect. And now let's grab this horizontal line. And right across here, right where that 50 month is, that coincides with the November 2021 peak. And you'll actually see something very similar when you look at the NASDAQ 100 as well with where we're at right now. Now, mind you, we're just at 48 on the monthly. We don't spend a lot of time. Look at the RSI. Let me stretch this thing out for you. That's volume. Let me get to the RSI. Here's the 50 line right here on your screen. We dip below it, but also you can see we had a bit of a time over here where we dip below as well. And you can even sort of read this as a bit of an inverse head and shoulders. Usually that sort of technical analysis is usually used on like candlestick patterns. But honestly, you can do similar things when you read momentum charts on this. The fact that you didn't go as low, the momentum didn't drop as much as it did previously, and that by the time it actually does pop higher, then you can actually say that there's some sort of rip is coming. Being on the monthly side of things, that's long-term trend. So maybe we start a long-term downtrend, but the S&P just doesn't necessarily have too much of a history of that. When you look back here at this jagging down, that is the Great Recession that earns its name great. When you talk about, we're talking about possible collapse of the financial system. And so at that time, dropping down below 20, anything below 30 is considered oversold. Below 20 is just unprecedented if it were. And that was a miserable and awful time. I don't know that we immediately have enough information to say that we have a miserable and awful time. But I do think that temporarily it is possible that we've temporarily reached some peak of fear. Now, whether or not it's the peak, I don't know. That's anybody's guess if we're done selling off, but I do think that we're getting near a bit of a bounce zone. So go down to the weekly chart. You can see how ugly it got dropping down below the 50 week. I said we lose that. Things could get ugly, and it absolutely did. Thank you, trade war with tariffs, right? So this does bring around some incredible opportunities. Let's go over to the Qs. I'll show you a little bit of what I shared over at the Discord today, that we actually have now 2 gaps made over the past 2 trading days. So from Wednesday to Thursday and Thursday to Friday, we made these gaps happen here between the candlesticks, and the market tends to fill those gaps. We are just above, we closed just above a major support area. That's this green that you see, another critical support area down below that, just as critical, if not more critical, because this bottom one includes the November 2021 peak, which actually sets us back 4 years in the market. So I think a lot of the current pain is already being priced in. I think a bounce could be next for us, even if it is a dead cat bounce that we see coming our way, that we get a bull trap coming, because I don't know that overall we've reached peak fear. I don't think anybody's qualified to say that. but it is something I wanted to share with you. And if I zoom out a little bit, you can see that we actually closed just below where we reached on the carry trade day, going all the way back to August the 5th. And we're over here in this mess that we had throughout 2024. But if we keep going to the left, back in time, right there at the bottom of your screen, I'll raise it up there for you. That is that November 21 peak that I talked about, right at about 408. Guys, we're not much above that. We're like 3% above the 2021 high that we had in November. So ugly, horrible sell-off that we've seen so far, but we don't have necessarily the information that it's going to sustain. I think that this is the day when the institutions really tried to wrest it out of our hands. Now, from a monthly basis, when we look at this, let me reset the chart view, and there we go. I just want to point out, just look at these last two pieces here. I know there's a bit of a mess. I'll try and clean it up for you. Right here in the middle of your screen, the 23.6, we are just north of that off of inflation and recession fears, and you can consider tariffs in here. As a matter of fact, I'll even put it in there for you as well. So inflation, and then we'll do tariffs. There we go, / recession fears. Now, mind you, the tariffs have a little bit of confirmation. That's helping us get down to the 23.6. 38.2, I think, is ultimate pain level. And right in between those two puts us a little bit south of this. So there should be another line in here. I'll put it in here for you right now, even though it doesn't necessarily wasn't formed by the ways the other ones were, but falling right in here, maybe if we make it through 23.6, watch this peak that you have in November of 2021 and watch this peak that we had in July of 23. I think that if we don't currently catch support, if we don't find that bounce coming in yet, we can watch for bounces in those areas. So I think there's a good chance that next week is a little bit of a reprieve from the pain that we saw. I hope we don't get more 5% down days. I can't imagine that we would. We've ripped down pretty darn significantly since the peak that we had going back just to Wednesday. So after all that sell, normally you get a little bit of correction back the other way, down almost 12% in 2 days time. So we closed down 6% in the NASDAQ 100 according to QQQ. Now for the big news that I have here, I will tell you, I did some dollar cost averaging today. One of those places I did that was with Russell 2000 stocks, and I said I'd show you this index. Clean, easy, simple when you look at this thing. The Russell 2000 stocks, they die up above this red line. So yeah, we can get up there, but we have a hard time staying there. We barely broke above it when you go back to August of 2018. We definitely ripped above it with all the quantitative easing, with all the stimulus that was coming out. The market was going absolutely bonkers. But then by the time we hit November of 2021, that was the beginning of the end until we got all the way over to November of 23. That brings us to this green region down here, down below the green part that we have for this big old bull channel that we're in, that the Russell 2000 lives, or I should say comes to life below the green line. Look where we're at right now. We're down below the green line. If we go back to what we had in March of 2020, and this is the Russell 2000 index itself, we have 3 months that we traded down below that green line. By the fourth month, we're back up above it. So maybe we have some near-term pain. We don't know necessarily where the bottom is. We are in the middle of all this chop. Maybe it happens to be right around the 1652, which is going to be pretty darn close to 10 times whatever IWM is. So if I go to IWM just real quick, just to see, IWM closed at 181. So there you go, 1/10 of the Russell 2000. So back to the Russell 2000 index itself. Pretty much you take IWM times 10, you get this value, or take this value of 1824 divided by 10, you got about what IWM is. So for this, I think we spend a little bit of time down here. For me, this is me dollar cost averaging during this time down here, because in the months that follow, when we start to rise back up again, we should get that outperformance. The pandemic couldn't keep us down, and then 2022 couldn't even break below it. As painful as that was, look at the pain that we have coming in now, wiping out all the gains that we had, taking us almost back to this peak that we had back in 2018. We're just above it right now. So within $100, according to the index, actually it's closer to like $88, if you will, to what we have back over here. So I do think that for me, this is that significant de-risk time that we start looking for building positions. Now, I can't speak for you guys. I can speak for myself, though. I am starting to build these positions where I start to see these deals come in. And I will tell you, being an Nvidia fan like I am, Nvidia, I said I've been waiting for 2-digit Nvidia. Well, here it is, $94 per share. These different blocks that you see are the support areas. That goes down to about 102 or down below that. This one goes down to about 89. And then we have another free fall period that goes all the way down into that 79, all the way down to 70. So $70 to $79. And then just tons, you can see how thick the green lines get down here. Tons of support. That means ultimate bottom. I still don't think that we'll see it. If we do, the market is seriously in trouble. If we get down here, we have news of recession. We have tariffs. Tariff war goes bonkers. Maybe geopolitical tensions are escalated. Inflation is starting to really tick up. Unemployment starting to go off the wheels. So all of those things, I think, could drive us down to 64. But short of those things, I don't think we make it to 64. But I will tell you that dropping down below $100, for me anyway, I start to see that 50 to 60% potential start to become more of a real. As a matter of fact, 50% up from now, we've already seen before for Nvidia. I do think, and I'll just give some commentary quickly on this one. I know that this is mostly about where the market was at, what I'm doing about it, and where you guys can see it over the Discord, me and the other panel experts, like I said, including you can see the different trades we're making. You see the trade wins coming out all the time. You guys can keep track of that stuff. And there's also the bread bot that's over there as well. You have AI tools, you have advanced charting tools, all these products and services that come along with that membership, especially when you join the earner tier, they get access to all of it. Use the code word CASH when you sign up. And if you guys like what you see on these charts, as a matter of fact, you can learn about them. Stock Mo, Mrs. Mo took their time to put together these rock solid courses that they've allowed me to support my channel by issuing those courses to you. If you go and check out that link, use the code word doctor when you sign up. You can learn about technical analysis, trading using the bread recipe, which trading based on a technical basis, which I also do. It's the exact trading strategy that I personally use. And then also options is what I typically use when I do that sort of trading with the bread recipe. And I tell you what, it works like a dream. You guys can find out all about it using the coursework down in the description through Stockmo Academy. Click the link, use code word doctor when you sign up. Grab that bundle while you're at it, where it takes the two courses, puts them all into a single purchase for you, and it's the best value that you're going to get. And I'll tell you what, it can pay back in dividends. So with Nvidia, I do think, I've given this analogy before, that I have 8th grade math students as I'm a teacher, and they have graphing calculators. First time they've ever had access to graphing calculators, and they still very much use them like either basic or maybe barely scientific calculators. They are so far away from filling out the capabilities of that hardware because they just don't know what to do with them yet. And that's where the education comes in. Well, fast forward that to AI, or scale it up to AI with what's going on with Nvidia as an infrastructure. People are just learning what exactly to do with AI, how to make it function in a profitable way and really bring it to some commercial scale. I think that we're getting towards that next inflection point that's going to be happening over the next 12 to 24 months. And I think that watching this pain happen to Nvidia and that question of AI growth, and can Nvidia keep on growing, and the fact that the price is coming down and it's de-risking it, to me, it furthers my convictions as I watch, as we still are learning, like, all right, we got this. Yeah, we can do large language models. We can do a lot of stuff. I think right now it's in the hands of the sciences. It's going to pass from the hands of the sciences into the hands of commercialization, and people really learn how to build out the profitability from it. And there's your second demand wave that you have coming through. And I think it's only going to be more power hungry over time, and I should say more resource hungry over time. They might work out that power issue. We're going to have to watch and see. It will take power, which, by the way, if it's onboard nuclear, well, then maybe we start to look at uranium too. But that's another conversation for another time. Guys, the markets, I know it's painful. I know it's hard to be in your portfolios when you watch all that money go out, when you have all those long positions. You can talk about ways to balance them. You can look up ways to balance them. You can come and talk to the panel experts. You can come over and be a member of the Discord. You'll have a whole team of people there to support you, and thousands of members who are going through the same exact thing that you are. We can all go through it together. Code word CASH when you sign up. Learn more, invest in yourself using that coursework as well. Code word doctor when you sign up for that. I really do appreciate your time here, guys. Subscribe if you haven't for the next time that I come back here. Enjoy your weekend. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.